Good morning. It's Friday, June 21st, about 6 a.m. Central Time. All right, the precious metals are mixed after yesterday's breakout rally. If you're one of our wealth management clients, our president, Bill Baruch, will be on the entire hour on CNBC's halftime show here today. If you'd like to schedule a call to discuss with Bill some of our wealth management portfolios, if they're right for you, please give us a call or email info@bluelinecapitalwealth.com. So looking at the precious metals here, and I always break it down on Fridays for the weekly performance. Actually, yesterday in the afternoon, silver was the best performing commodity for the week out of all the commodities that are out there. Better than the VIX, cocoa, any grain, anything that was out there, up about 4.4% on the week. However, overnight, we got a little bit of pressure going on in the silver market. I suspect some profit taken, also that copper market pulling back as well. Some people just kind of taking a little bit off, especially with some economic data here coming out today. So coming into this recording, platinum up 3.5% on the week, silver up 3.3%, gold up 1%, and copper unchanged. So a few observations here from yesterday's trading action. So silver really caught a bit out the gate, while the other metals, they struggled to react, and it was really the initial claims data that really indicated kind of another uptick here. 238,000 jobs initial claims filed versus 235,000 expected, and at the same time we saw a declining manufacturing activity out of that Philly Fed manufacturing index, and that really kind of gauges the health of a certain area of the country, that northeast area. So the expectations for multiple interest rate cuts, that continues to grow in 2024. So today we're going to begin here with both the flash services PMI and also the flash manufacturing PMI data. Expectations are for just a slight decline from last month. Now, if you look over at the pond, we saw that PMI data a little bit weaker in the overnight session, a little bit of pressure on the euro currency, British pound having some spillover effect from them with their interest rate decision, so the dollar's bumping up just a touch. That's also putting a little bit of a headwind here on some of these metals markets. So traders are going to really want to monitor the fluctuations of the gold market today, because I think that will give you your best gauge as far as, what the Fed is thinking and repricing things in. So last month, and I know you guys don't want to hear this, that flash services PMI data came in hotter than expected, and gold plunged. It was down about $51. So some levels here to watch. Gold continues to chew through. It's the June 7th sell-off. So really, all you got to do is chart this thing for like the last 6 months. You don't have to go farther than that. You look at where we made new all-time highs, and then you look at where we broke down from that June 7th. The thing that I don't like about the gold market is it seems to take the stairs higher and the elevator down. So looking at here today, we're going to kind of want to watch a couple things here. We moved back up to the 50-day moving average, 23.72. Can we close above that level? The line in the sand for the longs, I think, is still 2,300. We close below 2,300. I'm telling you, party's probably over for a little while here. If we close above this 50-day, we get a weaker flash services PMI data, chances are we're going to threaten some higher levels. 23.97, that's your critical level. We break above that, we're probably going to make an attempt to make a run at the all-time highs. Something brewing in the background, not catching a whole lot of attention. Israel, Lebanon, little bit of things brewing again over there, especially along the border of them too. So you do also have North Korea and Russia. They're making some arms deals and things like that. So there's a whole bunch of stuff heading, geopolitical stuff heading around this globe that's kind of heating up at the moment. Now, something else on the gold market, stochastics, they're starting to turn up, get some positive momentum there. The average true range on gold creeping a little bit lower, about $34. If you want to know how volatile a market is, just use the average true range. I'm telling you, it's the simplest way. If you're deciding which type of contract you're going to use based upon your account size, use the average true range. If you don't want to see $3,400 swings on average on a one lot in the gold market, perhaps come back and use 2, 3, 4 of the micro contracts here. Get that average true range down. Get your volatility right. Get your direction on your trading right. You're going to get a whole bunch of things right here. So, something on a positive note on the gold market. Goldman Sachs did revise their year-end target to $2,700. I think that that's also helping create a small bid underneath that market. It's about a 15% increase from here. Now shifting gears to silver, that's what most of you guys love. Silver up $1.24, kind of out of nowhere. It really came out of nowhere. It started in the session that was the Wednesday, kind of that early pause, light volume. Somebody came in there, kind of bought a bunch of it, up $1.24. The line that you want to see on there, because I had a lot of people having some FOMO yesterday. Look at the chart. It hasn't really broken out. We got to go above 31.20 in order for a breakout. We got to go above 32.50 in order for a holy crap moment. It's the party's on. Put your silver is great again hat on and let's roll. So we got to close above that 31.20. Opens up the door for a more significant breakout. And the momentum traders start to come in. 32.50, the YOLO traders start to come in. The volatility on silver, which is nice, has come down just a notch. Average true range sitting right around about $1.02 here on the day. Much better than that $1.15, $1.20. But if you look at the metals, something I always do too, forget what the metal is, forget what the commodity, the name of it is. Just look at the chart pattern. Chart pattern tells you a lot. Best looking chart pattern still in the metals. I think the platinum, I think the palladium, and then you're going to go copper. But if you're long the copper, you're looking at an entry in the copper, you want to see a breakout above yesterday's high. So if copper goes green on the screen today, chances are that copper market is probably forged that bottom and it's going to start moving up. We'll have to monitor some Chinese economic data as well. So, a little bit longer. I'll post on Kitco. I'll post an article on Zero Hedge. Going to be a long weekend of reading here. And then you guys need anything, reach out to me, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.